Imagine a $100 trillion network that moves money like a hidden bloodstream, unseen by governments, ignored by headlines, but powerful enough to topple economies. This is shadow banking. Welcome to Shadow Capital. Shadow banking is not one bank. It's a parallel financial system, a web of funds, vehicles, and contracts that perform bank-like functions outside traditional bank rules. Think money market funds, repo deals, securitized products, off-balance sheet vehicles. A hidden plumbing that channels credit and risk. Estimates vary, but at its peak shadow banking assets have been valued in the tens of trillions. The number often cited is $100 trillion globally when you add off-balance sheet exposures and related credit instruments. Size matters because scale multiplies fragility. 3 core processes make shadow banking work. 1. Short-term funding via repo markets. 2. Securitization, turning loans into tradable securities. And 3. Maturity/liquidity transformation, using short-term money to fund long-term assets. That mismatch is where danger hides. Shadow banks lack traditional safety nets. No central bank backstop, limited transparency, and heavy reliance on short-term funding. When funding dries up, assets can't be sold fast enough, triggering fire sales, contagion, and runs. The last time shadow banking nearly collapsed was 2007 to 2008. Securitized mortgages, opaque funding chains, and repo runs transformed a housing problem into a global credit freeze. The shock taught regulators and markets an expensive lesson, but it didn't erase the system. Shadow banking has new faces. In some economies like China, non-bank lenders and trust products play a huge role. In crypto, lending protocols and opaque exchanges mimic shadow functions, liquidity pools, leverage, and run-prone structures. The plumbing evolves. The risk pattern repeats. You don't need to work in finance to be affected. Shadow banking amplifies credit booms and busts, impacts interest rates, retirement accounts, and even jobs. When the plumbing fails, ordinary savers pay the price. Understanding it is the first step to protecting yourself. Shadow banking is the hidden artery of modern finance. Efficient, creative, and fragile. Regulation can patch leaks, but markets innovate faster than rules. Subscribe to Shadow Capital to follow the secrets of credit, the players behind them, and the patterns history refuses to forget. Comment below. What shadow story should we uncover next?